Now, in this episode, we want to make sure you understand how do you manage your installment payable per month from X dollars to Y dollar so that you have a lower monthly commitment and able to navigate these challenging times. Hi, today we're going to talk about mortgage. Now, what is mortgage? Mortgage is when we want to buy a property and we cannot afford the full price. So therefore, a certain percentage of the amount of the property that we want to buy, we get it from a loan. And this type of loan is called mortgage, the mortgage loans. So my question to you is, how much does actually a property cost? Most property gurus, so on and so forth, have already mentioned every property that we buy, if it's 500,000, by the time you finish paying off the whole thing, is almost 3 times. 500,000 property, by the time we pay off everything, is about 1.5 million. 3 times 500, 500, 500. So it'll be 1.5 million, which is 3 times to almost 5 times the value. Now, in this episode, we want to make sure you understand how do you manage your installment payable per month from X dollars to Y dollar so that you have a lower monthly commitment and able to navigate these challenging times. Okay, so in this particular episode, I want to explain to you what's the difference between refinancing and restructuring. Now, refinancing is basically talking about one property loan shifting to another property loan to another bank. So this shifting process is called refinancing. Now, why do people do refinancing? Because when you do refinancing, the interest payable from X percentage, maybe 4%, and when you switch over to a new bank, your interest payable is about 2%. So there's a savings of 2% from bank A to bank B. So that is interest saving, that is refinancing. However, in order to change one bank to another bank, so usually bank will look at your DSR, debt servicing ratio. So debt servicing ratio includes what are the monthly commitment that you have to pay. Credit card, hire purchase for the car, as well as multiple installment for different properties. So when you refinance A to a B bank, you need to understand what is your debt servicing ratio and what is your current interest that you're paying and what is your future interest that you're paying. With that is understanding about refinancing. Now, just now we mentioned about refinancing is about from one bank to another bank. That's called refinancing, right? So now we follow through what is restructuring. Restructuring is about talking to the same bank of the same loan. For example, if your installment payable is 1,002, can you negotiate that your monthly installment to become 800? The answer is yes. Now, how do you talk to your bank? So, Mr. Bank, you can tell them right now, because of pandemic, because of challenges, my interest payable is 4-5%. Now, because the latest rate is almost about 2%, you negotiate with your current bank and say, okay, the latest rate is this, bank ABC is this, can you please reduce my monthly interest from A to B? Now, if you successfully reduce your interest from A to B, your monthly installment from 1,002 can reduce to 800. Why is that so? Because the tenure is almost the same, but the beginning of the loan has reduced because of number of years you have paid. So therefore, your monthly installment can from 1,002 can go into $800. Now with this, you are able to restructure. Now why is restructuring is easier, fun and easier? Because first thing, you are dealing with the same bank, number one. Number two, you are not shifting a load of paperwork from one bank to another bank. You're not starting the process from fresh. You are renegotiating, restructuring your processes. Of course, there is also a lot of mechanics from where you start, because when you started this, you're paying 1,002 installment per month. But when you restructure, you're starting at 800 per month. So there is a different terms between here, and you need to understand what are your terms of engagement with your banker. So what is the difference between refinance and restructure? Which one is better? So I would recommend you to go with restructuring first. If you really cannot, go into refinancing. Why restructuring is better? Because restructuring is talking to the same bank. You do not need to pay all the legal fees. At the same time, from 1,002, if you negotiate successfully, you become 800. Your monthly commitment will go lower. At the same time, you don't have legal complication. At the same time, you don't have to relook into your DSR, which is debt servicing ratio. So this way, it's faster, more effective, and more efficient. Okay, just now you understand what is the difference between refinance and restructure, correct? So they have their benefits in their own way. So the question you have to ask yourself, refinance is better for you or restructure is better for you? So what are the considerations you must have before you think about your decision making, whether it's refinance or restructure? Now, the first decision, first area of concern is the interest. Which is a lower interest? Is it the old bank or the new bank or the restructure one? Which has the lower interest? So the lower the interest, the better it is for you. Why? Because averagely when we finish paying a house, we already cost us 3 times. By reducing 1%, we are able to reduce from 3 times to 5 times to maybe 1.5 times. That is a lot of savings, and that means many cars or many houses or many food that you can give to the community. So that decision is very important, the lower interest. So number 2 is about your financial condition. You have to look at your financial condition. If you're able to restructure, fastest to reduce your money installment from 1,200 to 800 with same bank instead of going through so many paperwork and so many phone calls with another bank. So therefore, you have to consider the time you spend and also your financial condition. Any one of the bank that reduce the interest payable and also the installment payable per month is the best decision. Why? Because managing finance in challenging times is about cash flow, is about surviving now, correct? So any bank that can help you to reduce your installment payable per month, the money value, you have no choice but for short-term measure, go into the lowest installment payable for a short period of time. And then when you are able to bounce back, let's relook into the finance again. That time you can consider refinancing instead of restructuring. Okay, first is about interest, second is about your financial condition, the third one is about legal fees. Now if you refinance, there is definitely a legal fees because bank A to bank B and so many processes, there will be legal fees, and legal fees can be very costly as well. So if you are restructuring, usually the bank will say, okay, dear so and so, I hereby accept this particular offer. We would like to offer you this particular offer by reducing your interest by X percentage or reducing your installment per bill from 1,200 to 800, but the tenure remain the same or whatsoever is just one piece of document, and that document already supplemented the original legal processes. So therefore, no legal fees. So restructuring means you save a lot of legal fees. Refinancing means there is possibility legal fees. Are there any opportunities where you go into a new loan and there's no legal fees? The answer is yes, but you need to look at the mortgage specialist to find the best loan for you and the best package that do not have legal fees. Okay, then the fourth thing that I need you to consider is about paperwork. Now, because of this pandemic, sometimes we're very busy having income 1, income 2, income 3. So getting all the paperworks, and the paperworks may be not as efficient as we need to be. For example, the income may have dropped, or there will be possibility the income has dropped, or there is a possibility that you have lost a job or there's not much available resources available. If that's the case, the paperwork does not allow you to get a fresh loan or may not get you the restructuring as well. So there is a possibility when you do restructuring, you do not need to have fresh paperwork. This way could be a blessing to you. So therefore, it's very important for you to consider the 4 areas of consideration. Now, if it's too complex for you to understand, you can always look for your licensed financial advisors to help you to understand which is a better loan and which is a better mortgage plan for you. Hi, if you like this particular episode, I hope you can subscribe, click this button and join us to learn more in the coming future episode.